What Trump's 2025 presidency means for the economy, his policies and their global impact. Welcome back to Global Dynamics Hub. Today we're diving into one of the most critical events shaping the future of both the US and world economies, the re-election of Donald Trump in the 2024 US presidential election. Trump's previous term left a lasting impact on economic policies, from tariffs and trade restrictions to tax cuts and deregulation. Now, with another term in office, what do these policies mean for America's economy, and how will they ripple across the globe? In this video, we'll break down the key aspects of Trump's economic approach, explore how his strategies may influence everything from the job market to international trade, and analyze the broader global shifts that could emerge as countries react to these decisions. Stay tuned as we unravel what Trump's 2025 presidency means for the economy and its global impact. With Trump re-elected in 2024, his economic policies and their ripple effects on both the US and global economy are once again at the forefront. Trump's presidency, with its America First strategy, has reshaped the US economy through significant changes in trade, taxes, and international relations. These policies weren't just bold but often controversial, leaving a legacy that has continued to influence economic policies worldwide. Now, with a new term, many are asking, what will this legacy mean for the future? How might these policies be continued, expanded, or revised? And crucially, what impact will they have on the American economy and global economic landscape as we face rising uncertainties, inflation, and shifting trade alliances? One of the cornerstones of Trump's economic agenda has been his aggressive use of tariffs, particularly against China. His administration previously imposed tariffs on billions of dollars worth of Chinese goods to reduce the US trade deficit and incentivize American manufacturing. With his re-election, we expect these tariffs to remain or even expand, pushing further for US independence in manufacturing. His goal is to create more American jobs and decrease dependency on foreign goods. While tariffs benefit certain American industries, such as steel and aluminum, by giving them a competitive edge over foreign imports, they also have significant costs. Increased production costs in manufacturing and construction sectors are often passed to consumers, leading to higher prices on items like electronics and appliances. China's likely retaliation, including tariffs on US agricultural exports, could renew challenges for American farmers, as seen during Trump's first term. For example, soybean farmers who once relied on China as a primary buyer saw a significant drop in exports when tariffs were previously in place. The US government has offered financial aid to affected farmers, but uncertainty and potential long-term impacts of these trade disputes continue to loom large. Globally, Trump's tariff policies may prompt other nations to further reduce their reliance on the US, leading to strengthened trade alliances outside of the US-China sphere. If these policies intensify, we could see a deeper realignment in global trade, potentially creating a more divided international market. The Tax Cuts and Jobs Act of 2017, one of Trump's most impactful policies, significantly reduced the corporate tax rate from 35% to 21% and offered tax cuts for individuals, with the intent to drive economic growth. In this new term, Trump is expected to pursue additional tax cuts, both for individuals and corporations, in hopes of stimulating investment and job creation. These cuts have helped corporations fund dividends, stock buybacks, and expansion projects, leading to stock market gains. Supporters argue these moves benefit Americans through boosted retirement accounts and investments, but critics argue they primarily favor wealthy individuals and corporations, widening income inequality. In this term, Trump may face pressure to address these concerns, particularly regarding fiscal sustainability, as additional cuts could increase the national debt. From a global perspective, low corporate taxes in the US continue to attract international businesses, drawing investment away from regions like Europe, where corporate tax rates tend to be higher. This could encourage more global businesses to shift operations to the US, further strengthening Trump's economic agenda. Trump's foreign policy prioritizes US interests, often leading to tensions with both allies and adversaries. His relationship with Russia has been complex. While he maintains sanctions, he's often advocated for a cooperative approach, especially in areas like energy. In a second term, he may consider easing some restrictions to promote US-Russia trade, especially in the energy sector, where both nations are global players. However, such a move would be controversial and could strain relations within NATO. With the European Union, Trump has previously clashed over trade issues, including NATO funding and trade imbalances. Trump's administration has often targeted the EU's automotive industry, raising the possibility of tariffs on European cars, which would significantly impact EU economies like Germany's. These tensions have already led the EU to diversify trade partnerships with countries like Japan and Canada, reducing reliance on the US. As Trump continues with similar strategies, the EU may push for greater economic independence from the US, especially in sectors such as technology and energy. We could be looking at a future with more regionalized economic alliances where the EU, the US, and China pursue independent economic policies, leading to a more fragmented global economy. One of Trump's most defining economic policies has been his hardline stance on China, including tariffs, tech restrictions, and an emphasis on decoupling US manufacturing from China. Trump's re-election means this approach will likely continue and intensify, aiming to limit China's economic influence and foster American jobs. Many companies, influenced by these policies, have already begun diversifying supply chains by relocating manufacturing to countries like Vietnam, India, and Mexico. While these changes can reduce dependency on China, they often raise production costs in the short term. Trump's continued efforts could lead to further economic decoupling, potentially creating two competing economic blocs, one led by the US and allies, the other by China. This division could introduce higher global production costs, inefficiencies, and could force other nations to align economically with one side, reshaping global trade. Domestically, Trump's second term is expected to focus heavily on tax cuts and deregulation. He may push for further reductions in individual and corporate tax rates, arguing that lower taxes boost disposable income and drive economic expansion. Trump is also likely to pursue extensive deregulation in sectors like energy, manufacturing, and technology, emphasizing an approach that removes perceived barriers to business growth. Trump's prior focus on deregulation, especially in the energy sector, aimed to make the US a net energy exporter. A renewed push for deregulation may boost industries, but could also raise environmental concerns. Infrastructure projects are also likely to be a focus. Trump has voiced support for large-scale investments in roads, bridges, and even high-tech initiatives like 5G expansion. These projects would drive job creation and improve economic efficiency, though they present funding challenges that could increase the national deficit. With his re-election, Trump may intensify his stance on trade with China, potentially expanding tariffs or imposing stricter regulations on Chinese investments in the US. This aligns with his previous goal of reducing China's economic influence and protecting US industries. While this may increase costs for consumers, it could strengthen US businesses by reducing Chinese competition. Additionally, Trump may continue assertive trade negotiations with the European Union, focusing on reducing trade imbalances and targeting sectors such as technology. This could mean new tariffs on European goods or limits on European tech companies in the US as part of a broader digital nationalism policy. His approach to Russia may also shift, with a possible easing of sanctions to promote bilateral trade, particularly in energy. However, this could strain NATO alliances and increase geopolitical tensions. Trump's economic policies, reinforced by his re-election, are set to further influence the US and global economies. Domestically, tax cuts, deregulation, and infrastructure spending might offer a short-term boost. However, intensified trade restrictions and tariffs could raise prices and provoke retaliatory actions from other nations, impacting US exports. Globally, these policies may lead to a more divided economic landscape, with nations aligning into trade blocs based on their priorities. We might see competing trade networks led by the US on one side and China on the other, with Europe and emerging markets forming alliances based on their interests. This fragmentation could reshape global supply chains and slow overall economic growth in the long term. As Trump begins his second term, the world watches closely to see how these bold economic policies unfold and what they mean for the future of international economic relations.